day. I'm Chartered, your accounting tutor. In today's video, we are going to continue from books of original entry. Books of original entry. Mind you, if you are following up my video, we have just concluded treating the cash book. And the second book of original entry, which we are going to look at, is the journal proper. Why are we treating journal proper after the cash book? Because it also have a debit and credit, which most learners find it very difficult to understand which account to be credited and which account to be debited. The journal proper also have that features. What is journal proper? Journal proper is one of the book of original entry into which all transactions that cannot be recorded in the older subsidiary books or in the older books of original entry are recorded in the journal proper. I am saying that the journal proper is one of the book of original entry into which all transactions that cannot, as the emphasis, that cannot be recorded in the older subsidiary book, that is the books of original entry, are recorded in the journal proper. For example, the cash book is used for recording only cash transactions and check, while the sales day book is used for recording credit sales, that's goods sold on credit. The purchase day book is used for recording goods purchased on credit. The return inward day book deals with goods that are returned, while the return outward deals with goods that are returned out. We've discovered that some transactions cannot be recorded in all these books. Therefore, they will be recorded in the journal proper. And that is why the journal proper is very, very important. And mind you, books of original entry are books into which transaction must be first recorded before transferring to a ledger. So it means that all transactions must find a place to be recorded in the books of original entry before they are transferred to a ledger. And that is why we are going to give example of such transactions that are recorded in the journal proper and then show how they are recorded via the journal proper. Let's continue. If you look at the examples that are recorded in the journal proper, example 1, we have purchase and sale of non-current assets on credit. Purchase and sale of non-current assets on credit. Here is not by cash, neither by check. So you cannot record them in the cash book, neither in the purchase day book, because purchase day book deals with only goods that are meant for resale that are purchased. So here, these are non-current assets, such as what you call fixed assets, such like the furniture, building, land, machinery, equipment, and what have you. So if you purchase them on credit, you cannot record them in the cash book, neither in the purchases day book, because it is not goods, and that is why they are recorded in the journal proper. Then the next one, we have what's called goods withdrawn for private use. These are goods withdrawn, and it is not cash. Therefore, you cannot record it in the cash book. So the only place you can record this type of transaction is in the journal proper. The next is opening balances in the books of an existing business. You know, an existing business, because of going concern, have opening balances. Like opening balance of cash, opening balance of bank, opening balance of stock, assets, and others that have opening balances. So such opening balances find themselves to be recorded in the journal proper. As you arrange them, I'm going to do justice to everything, all the examples. We are going to treat them one after another, and you see how they are recorded via the journal proper. The next one is correction of errors made during posting transaction in the books of account. It is possible that when the accountant or the bookkeeper is recording transaction as a human, he must commit errors, or some errors will occur. So such errors are corrected in the journal proper. You are not to go and cancel an error corrected in the books. It's an offense. If you cancel, it becomes fraud. Therefore, any error committed, leave it and then go and correct such error using the journal proper. Some we call it the general journal. The general journal is not the right name here. The right name is journal proper as far as accounting is concerned. So all errors committed in accounting, the process of posting transactions in the books of account are corrected using the journal proper. The next one is transfer of an entry from one ledger account to another. This is another entry that is also recorded in the journal proper. A transfer entry is a situation whereby one account has been moved from a different account to another account. It's either Mr. A owns the business and Mr. A decided to pay another person's debt. It means the transaction made in Mr. A will be moved to Mr. B. And many other transfer. I know an account can be transferred from one to another, not ledger, but not double entry. No, a situation whereby one balance from another account can be moved to another account to settle a certain balance or anything that will occur in the business that needs such a transfer. So such transfer are recorded in the journal proper. The last one here is just a general statement, because sometimes the item captured here might not suitable for another transaction. No, business have a lot of transactions that might arise newly. So any transaction that arises new in the business that cannot be recorded in the cash book, neither the sales debut, the purchase debut, return or inward and outward debut, such transaction should find itself in the journal proper. Let's see how we can give the example on the first example. We give illustration on the first example and then record it in the journal proper. Mind you, I promise you, I'm going to treat all these entries because journal proper, most learners do not understand what is happening in the journal proper and the transactions that are supposed to be recorded in the journal proper. So today we are going to start posting into the journal proper via the examples given. Number one, we now say bought furniture on credit from AYZ 50,000. You can see that furniture be purchased on credit. Furniture is a non-current asset. So if it is purchased on credit, it means it will be recorded in the journal proper because it's not by cash and it's not good. So you cannot take it in the order day books. So let's see how you record it. First, you have to draw your journal proper. The journal proper have the date, have the particulars, have the folio, the debit and credit. And there are rules of recording into the journal proper. The rules must be respected. Number one rule is that the debit account or the debit entry in the journal proper must come first before the credit entry. If you look at the ledger, there is no strict rule that the debit entry must be posted before the credit. If you like, you can post the credit before posting the debit because the two ledgers are separate. So which one comes first does not matter. But in journal, the debit entry must be recorded first before the credit entry. If you take the credit entry first before the debit entry, even if the position is correct, you still get it wrong. Why? Because the debit must come first. It's the rule that is used strictly in the journal proper. And the next in the journal proper, after posting, you must narrate or you must explain what happened. In the ledger, there is no explanation. You don't explain the ledger, neither in the cash book. But coming to the journal proper, you must explain exactly what happened. And that is why there is what is called narration. And the narration must start with the way being what happened, being to record what happened. And as you are recording, you must be, as you are writing the explanation or narration, it must be clear and short. Don't make it long. Don't go and take the whole transaction and start copying back that you are narrating. No. The narration, the rule is that it must be brief, clear, and short. That is precise to explain what happened. This is another rule. And after that, you must close the transaction all to the end, meaning this transaction is independent of another. You close from the first end to the other. It looks like a trial balance, but it's not a trial balance. And these are the strict rules you must use when you are preparing your journal proper. The debit entry must come first, followed by the credit. And you can see something very well. You look at the first posting here is in the debit side, and the credit one is shift inside. This is what is called indent. Indent small, that is shift the transaction that is moving to the credit side a little bit inside. It should not be on the same level with the debit end to show that it is moving to the credit side. So the indent of the credit posting is also very important when you are recording in the journal proper. So let's start. Here too, because the journal proper have debit and credit, the rule of double entry is still very, very important. Here too, you must identify the receiver and you must identify the giver in the transaction so that the receiver will be debited and the giver will be credited. So in this transaction, the business is buying furniture on credit from AYZ Limited. Is buying on credit. So now AYZ become the giver. The giver is the account that gives in the transaction. If the business is buying furniture on credit, it means AYZ is giving the business furniture. Therefore, AYZ become the giver account, which should be credited, and the receiver account is what the business receives. I emphasized in the previous video that the receiver account, don't forget, is what the business is receiving in the transaction. So in this case, the business is receiving furniture, and furniture become the receiver account, and furniture will be debited based on the principle of double entry, or all assets purchased are debited, as the case may be. So in this case, we come here and know that based on the rule of journal proper, the debit entry must be recorded first. You come here and say on the 3rd of March 2026, furniture will be debited 50,000, and this is GF1. Mind you, I told you I'm coming back to explain much on what is called the folio. So don't bother whether you understand very well or not. I want to have a video, a special video that will address what is called folio. But this is what is called general ledger word 1, because general ledger here means other accounts that are not sales ledger nor purchase ledger. So if an account should not be recorded in the purchase ledger, or should not have a purchase ledger or sales ledger, then any other account falls under what is called the general ledger. So this is general ledger 1, and then AYZ will be credited because the giver, and you mind you indent small and then put AYZ, and this general ledger 1, 2, because this is another account. This account is separate from this account, general ledger 2, and the amount to be credited with 50,000. Then you must narrate, you must explain. If you didn't explain, means in terms of an examination, you will lose your mark if you did not explain. So here you must start with the word being. It's a key word. Being to record, or this become the opening statement. You know, say being to record furniture bought on credit. Very clear. You must not say being to record furniture bought on credit from AYZ. No. That is not it. Make it clear that being to record furniture on credit, or you can just say being furniture purchased on credit, or you can just say being furniture purchased. But the credit is important so that any person picking the book should know that the furniture was purchased on credit. And that is why I must summarize it in a precise way that will explain what happened. Next, you go to the second one. 4th of April 2026, sold equipment on credit to ABC Limited. Here we are also selling. And equipment here is also a non-current asset. Mind you, non-current assets are assets that the business buy to have future economic benefit. Land, building, furniture, equipment, motor vehicle, and what have you. So if they are purchased on credit, mind you, the only place we are record in terms of books original entry is nowhere but in the journal proper. So here, also identify the giver account and the receiver account. If the business is selling equipment on credit, it means the business is giving out equipment, that is selling equipment. Then the business gives out equipment to receive, and the receiver in this case become ABC Limited. The business gives out equipment and ABC Limited is receiving the equipment. So in this case, the equipment become the giver account, while ABC Limited become the receiver account. And then, just like the rule of journal, you know that the receiver account must be recorded first. So in this case, on the 4th of 2026, the receiver account, which is ABC, is receiving, and then the amount will be debited at 10,000. Then this will be general ledger 3. That's the next one that follows. Then the next transaction will be credited. Mind you, you must be careful that you indent. Don't put it on the same level. Meaning this transaction is going to the credit side, should shift to show clear that it's going to the credit side. Now on this date, equipment have been given out and sold, and any giver account should be credited, and that's why equipment is credited with 10,000. And then the folio is general ledger 4 in that order, because this account is separate from this with and the others. And then you must explain, starting with the way being to record. Being to record, equipment sold on credit, short and clear. Being to record, equipment sold on credit. And this, then you must also close it. The closing tells us that this transaction is completely different from this. But if you leave it open, and we don't balance the journal proper, don't leave it open in such a way that you add. No, we're not going to add all the totals. No, it is not a trial balance. So after post, it means this account is independent with this. Mind you, this is how transactions are posted in the journal proper. The first illustration, purchase and sale of non-current assets on credit. Don't forget to follow my video because all the other transactions will be recorded and demonstrated in the journal proper. And these are areas where most learners, I must confess, that have difficulty in posting into the journal proper, and some don't even know how journal proper is being handled. So if you follow me up, you are going to know how all these transactions are posted using the journal proper. Don't forget to like my video, to comment, and also share so that all learners that are having difficulties in this area will have no issue writing examination or assignment or any area. Don't forget, I remain your accounting tutor, Chartered.